Hi everyone. SoFi reported third quarter earnings results that pleased stock market investors. So in this video, I'm going to take a deep dive into their earnings call and try and get a closer look into what had investors so excited about SoFi Technologies stock. So let's start with the CEO, Anthony Noto, who said in his opening remarks that in the current quarter was the sixth consecutive quarter of record adjusted net revenue of 419 million, which was up 51% year over year, reflecting record revenue in all three business segments. So right off the bat, great news for investors. Not surprising to see that the market liked what they saw. Going a bit lower here, he notes that their bank deposits surpassed $5 billion, which was up 86% quarter over quarter, and it led for them to have their savings of 125 basis points in the cost of funds because deposits cost the company less, right? So when customers put money in their account, SoFi can then use that money to offer loans to other customers, and it doesn't cost them too much to have that money on their platform, so they don't have to pay depositors as much money. So that spread between what they pay depositors and what they charge for loans is the net interest margin, and that's what increased here. That's what they're talking about, 125 basis point increase. And it was another positive of net income for SoFi Bank at 28 million for an 11% profit margin. So again, good news. Additionally, they added 424,000 new members in the third quarter of 2022. That brings them to 4.7 million members, which was up 61% year over year. Now, in lending, their personal loan performance more than offset the lack of demand in student loan refinancing and the less robust performance of home loans. Both student loans and home loans were down significantly year over year. Student loan refi continues to be negatively impacted as federal borrowers await the end of the moratorium on federal student loan payments. Home loans face macro headwinds from rising interest rates while we continue to process the transitioning to new fulfillment partners. So two things here I will add. Number one, on student loans, that's going to likely turn around as the moratorium on the pause in payments ends in 2022, starting 2023, if the government doesn't extend it again, as they've done so many times already. So that could end, that could turn into a tailwind for SoFi. However, home loans is likely to continue to be a headwind for them. Rising interest rates is going to discourage people from refinancing, number one, and less people are going to be interested in buying homes at these high level of interest rates, as well as expensive pricing, right? Home prices are elevated from 2019, significantly above 2019 levels, and now mortgage rates are also high. So you look at high price for a home, high mortgage rates, that's going to lead to a very high mortgage payment, which is going to discourage home buyers from entering into the market. In the third quarter alone, the difference in our deposit cost of funds and other sources of debt was approximately 125 basis point versus 100 basis points in Q2. So that's encouraging. That's what investors like to see, is the spread continue to widen between how much it costs them for money and how much they lend money out, right? How much they have to pay to get money and how much they can charge to lend money. That's in essence what a bank does, and that's encouraging to see them expanding this margin. It's partly because they're offering right now customers an industry leading yield. So if you deposit money in a savings account or a certificate of deposit at SoFi, they're offering some of the highest rates in the industry. And so that's attracting the $5 billion in deposits that they were able to attract in the current quarter. Here they note they increased their checking and savings APY to 2.5% as of September 30th, and they're increasing that rate to 3% this week. So it was 2.5%, now they're raising it to 3%. That could encourage even more customers to sign up. Revenue of 85 million grew 69% year over year. Another quarter over record revenue from Galileo that comes with a 29% margin or 30% if you exclude Technices. So this is good news that a high margin segment of SoFi's business is growing faster than the overall business. Christopher Lapointe, who is the CFO, he notes that they had record revenue and record EBITDA in the quarter. Growth accelerated and they delivered record adjusted revenue and record EBITDA, which was up 24 million. Margins expanded by 500 basis points, and they saw margin improvement across each of sales, marketing, technology, product development, general and administrative, and operating expenses function expense lines. So good news. As revenue is increasing, they're seeing profit margins expand. That's what you like to see, evidence in economies and scale. Here they talk about Q3. Originations grew 2% in loan originations year over year to 3.5 billion. It was driven by record volumes in personal loans, which grew 71%, but both student loan and home loan originations were down by more than 50% year over year. And home loan was down even more than that. And management did not want to give you the specific numbers for how much the home loan and student loan was down, but they did want to give you the specific number for how much personal loan was up, right? So shedding more light on the positive number and, don't think so much about the negative numbers. The CFO notes that delinquency rates and charge-off rates remain relatively healthy and still below pre-COVID levels. It's reasonable to expect credit metrics to revert over time to more normalized pre-pandemic levels, but they continue to expect very healthy performance relative to broader industry levels. And here's a troubling trend for investing in SoFi stock is that right now the credit performance is good because consumer balance sheets are healthy following several rounds of fiscal stimulus from the government. As that fades, as the economy enters into more slower growth and less robust consumer balance sheet, loan performance could deteriorate. And they even tell you it's reasonable to expect these metrics to revert to more normalized pre-pandemic levels. So management of SoFi is telling you that our loan performance is not going to be as good as it has been. So this is something for SoFi stock investors to look out for. I will end with their outlook for the fourth quarter. They say that our outlook also assumes a late fourth quarter 2022 benefit in student loan originations ahead of the January 2023 student loan payment moratorium ending of that. So before the end of that, they expect to get a benefit from student loans, and based on the trends that they experienced in 2021 when students were expecting this to end at that time. As I mentioned earlier, the government has extended this pause several times, and there is no saying that, what if they extend this pause again? We don't know for sure if they will or they won't. Still, the company, SoFi, increased its revenue outlook for the full year. Now they expect revenue be in the range of 1.517 billion to 1.522 billion. That was up slightly from 1.508 billion to 1.513 billion. Nothing incredible there. And full year 2022 EBITDA of 115 to 120 million was up from the prior guidance between 104 to 109 million. This was more of good news, I would say, than the revenue increase is the increase in EBITDA, the midpoint of 117.5 million compared to the midpoint of 106.5 million is percentage-wise a bigger increase than the percentage-wise increase in revenue. So that's more good news for SoFi stock investors there. Okay, so yes, overall a good quarter, more progress for the company towards achieving its long-run goals and its long-run targets, becoming more profitable and growing its top line. attracting new customers. So overall, good news, excellent progress for the company. It's not surprising to see SoFi stock investors enthusiastic about the quarter's results. So that's all I've got for this SoFi stock earnings deep dive. Thank you for watching, and if you've gained some value from this video, please hit the like button and subscribe for future updates. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.